even though they're saying, okay, it's not the 2 negative quarters, but no one is defining what it is. So if the textbook definition, which is apparently what everybody's seeing, even myself, is wrong, then what is the correct definition? And then because it cannot be whatever the Fed decides, whatever indicator that they want to use. Welcome back, YouTube. So today we got the official statement from the Fed. We got another 0.75 basis point rate hike, and it seems that they are sticking to their guns with trying to push or propel this bullish news, even though we don't really have any evidence of the rate hikes even working. These are all just projections, and in my point of view, really just wishful thinking as of right now. Until we start getting some evidence of a curve here, because remember, they've been swinging since the beginning of the year and missing every single month. We have not had 1 month of a retraction yet. They are still sticking to their guns and pushing this rhetoric that, okay, well, all is well, this is getting ready to come down. We're already pretty much planning to, kind of de-escalate these rate hikes and pretty much just declaring victory over inflation. I think that's really interesting, to say the least. But overall, for the markets, this is, as we know, emotions drive the market in the short term. And we have like the CPI numbers and stuff like that are going to come out, and we'll get some more concrete numbers here later this month. But the real thing is, are they correct? And we also see some like debacles over what the definition of a recession is, which I find that to be the most interesting part of this whole situation, because it seems to me that it is pretty much, it depends on what the Fed decides what a recession is. It pretty much, outside of the standard definition, which is what I understood this entire time, even prior to the situation, was to be 2 negative quarters of GDP growth. But apparently it's a recession only if the Fed decides, and if they can pretty much pick which indicators they want to use to determine if it's a recession or not. So I didn't know that was a thing, but apparently that is the case. And we're going to get into that. I'm going to play you a clip out of the meeting today so that you can get Jerome Powell's actual official answer. And I'm also going to play you a clip from the White House today, when they both asked about defining the terms of a recession. But here's the numbers from how the market responded to Jerome Powell's message. And both of them, pretty much all the markets reacted in a bullish way, as I just discussed. Emotions determine the market in the short term, and he's pretty much declaring victory, and that everything is getting ready to turn around relatively soon. So I expected some bullish, well, not bullish, but green movement in the market. So the S&P added 2.6% to close at 4,023. The NASDAQ gained about 4.1%, closed at 12,032. And the Dow Jones leapt 436.05 points, or 1.3%, to end at 32,197. So you can see why, pretty much just based off of how the market reacted to him saying we're not in a recession, or that they believe that inflation is under control and they're going to start tapering off. So you can only imagine if he would have said, okay, yes, by definition, we're in a recession and stuff like that. You can imagine the negative effect. And that's really what they don't want. And if we keep in mind what they've been doing this entire time, I'm not surprised that they're reacting like this, or trying to be very careful with their words, or even altering or at least failing to admit that we're in a recession right now, because they've been doing this all along, even though we had the rampant inflation, and they really tried to get inflation under control, and with expectations, even with the 0.25 basis point hike a month after coming off of quantitative easing. We were injecting at the peak $130 billion a month into mortgage-backed securities, all the way up until March, April. And the following month, they said they started out with a 0.25 basis point hike. And we're really just shocked that inflation was running away from us. So when they did that, I knew that they were trying to be careful and not rug pull the market. We have midterms and stuff coming up, and no one wants to be talking about, well, none of the politicians wants to be talking about like a recession or have this hanging over their head here, because obviously that's going to affect votes and stuff like that. So I understand this, and this aligns with what they've been doing earlier this year, but we cannot forget that they have been behind the ball this entire time. And we start talking about price action in the market, stock market, crypto market, and stuff like that. We you'll have the people who will jump in and who will simply just trust what the Fed is saying. But then you're also going to have people who are thinking more critical, probably even more so along the lines of what I'm saying right now, is the fact that we have zero evidence of what they're trying to, spoon feed us right here. And when you take into account the track record, the fact that they've been missing and they failed to admit that we even had recession. I mean, they failed to admit that we even had inflation. Then they said inflation was transitory. Then they said inflation was good. And then they said that inflation, they had it under control. And then they said the 0.25 was going to help, and the 0.50 was going to help, and the 0.75 was going to help. And now here we go again with another 0.75. This is, when you miss that many times, it really disrupts the trust that you have into what someone's telling you. And you say, okay, well, before I put my money in, we're going to wait and see, because you've missed too many times for me just to simply take your word for it. We've had too many, okay, this is it, we got it, everything's fine right now moments for me to take your word for it and start throwing my money back in. And I think that's where we're probably going to see a lot of people where they're at, unless institutions come in and start pumping the market, which I doubt at this point. And we may see some bullish movement, but I really doubt that we're going to see evidence of a reversal until we get some more CPI numbers. And the most interesting thing is we're not going to have another Fed meeting until September 20th. So we're going to pretty much have the July numbers in August and the August numbers in September, all before the next Fed meeting. So we're going to get 2 CPI reports before the Fed meeting meets again. So by that time, we're certainly going to have a very clear indicator as far as to what direction we're going to be headed, and what kind of year we're going to have to close out the final quarter. So that is something to certainly keep an eye on. So let's deal with this Jerome Powell and the White House officials and stuff like that dodging around this, what is a recession, right? So I'm going to play this clip here when Jerome Powell was asked very directly what a recession was, or what the terms of a recession. Here we go.
From CNBC.com. Just a question about, I hate to keep banging the drum about recession, but most of the polls that we're seeing now from the public, people believe that we're already in a recession or heading for one. Economists pretty much the same thing. They're being told by folks like you and in the administration that we're not in a recession or we're not heading for a recession. Frankly, coming from the same people who told them that inflation was transitory, telling them now that we're not heading for a recession. So what would you tell the public to reassure them now that you feel confident in your forecast going forward and the Fed is ready to respond to a potential downturn in the economy?
No, all I've really said is I don't think it's likely that the U.S. economy is in a recession now. And I've explained why that is the case. It's because you do see a very strong labor market, and I think the public will see that as well. Going forward, what we've seen is a slowing in spending, as I mentioned. We've seen the very beginnings of perhaps a slight lessening in the tightness of the labor market, but it would only be the beginnings. So, and I mentioned that I also said that our goal is to bring inflation down and have a so-called soft landing, by which I mean a landing that doesn't require a significant increase, a really significant increase in unemployment. We're trying to achieve that. I've said on many occasions that we understand that's going to be quite challenging, and that it's gotten more challenging over recent months.
So I'm going to freeze this here.
Powell, Kyle Campbell with American Banker. The FOMC has historically tried to.
Okay, so that's not the question I wanted, but so just like we were talking about earlier, he's pretty much saying that we're not in a recession because of the labor market and the fact that they're trying to. They expected a decrease in spending, and this is all in the effort to get us a soft landing. Now, when you look at the textbook definition, which is the 2 negative GDP quarters and stuff like that, the labor market, yes, it's a part of it, but it's not the end all be all. The definition has not been, if the labor market is strong, then there's no such thing as a recession. There are other factors that go into that. It does not matter. We can all be working and making $2 an hour, and suffering immensely. There is other factors that go into these numbers here. And Jerome Powell knows this. I don't believe this is beyond his grasp of understanding. But just like we were talking about with the 0.25 and the transitory stuff like that, this is the ultimate goal, which is to get us to a soft landing, which is to not pretty much rug pull the economy or cause fear, layoffs and stuff like that. So they're going to have to be backed into a corner in order to admit that we are in a recession, the same way that they were backed into a corner to admit that inflation wasn't transitory. I'll say leadership here in the Federal Reserve is not one that is in front of the ball. I'll say that, just based off of the last year or so, they are not pivoting until they are forced to. So this is why we've been behind this entire inflation movement this entire year, because they don't pivot ahead of time. They are not proactive, they're reactive, if that makes sense. So, and then we're going to spin the clip here to Twitter, and I'm going to show you another example of the White House here saying that, okay, well, it's not the textbook definition of a recession here, and this is that they're looking at other indicators, which are fine. There are a lot of indicators, but it does not vary based off of the ones that you want or if one is strong. That was my understanding prior to this event here. So let's take a listen here.
If things are going so great, though, then why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth in a row, and then you have White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition. That is not the definition.
Brian Keith said in 2008, of course, economists have a technical definition, which is of a recession, which is 2 consecutive quarters of negative growth.
I can tell you this.
Yesterday he said 2 negative quarters of GDP growth is not the technical definition of a recession.
It is not. It is not.
Why did he say that?
It is not. I can speak to what he said yesterday in front of all of you, which is the last thing that you just repeated. There are many factors, economic factors and indicators to consider. And I will say that the textbook definition of recession is not 2 negative quarters of GDP. We have a strong labor market. We have business.
Okay, so and let's deal with this here when we get into my thoughts as far as for going forward. The most interesting part about this whole thing, even with Jerome Powell and the White House officials, all that kind of stuff, is even though they're saying, okay, it's not the 2 negative quarters, but no one is defining what it is. So if the textbook definition, which is apparently what everybody's seeing, even myself, is wrong, then what is the correct definition? And then because it cannot be whatever the Fed decides, whatever indicator that they want to use to determine a recession. Technically, overall, it was a broad scope to say, okay, well, if the GDP is retracting it for 2 negative or 6 months, if we're retracting, then we're in a recession. But apparently, if an indicator is doing good or whatnot, that makes all the other indicators null and void. So my only question is, would the White House, would the Federal Reserve, would they please provide the correct definition of a recession if, in fact, the one that we have is wrong? Don't give us this, because right now it just seems like it's whatever you want to call it, and that there in itself screams manipulation. And we have enough of that going on in the stock market and the crypto market. So just for everyone's sanity, please explain what that is. For me, I am pretty much waiting on evidence of a reversal here. I don't believe, just kind of like what that guy said to Jerome Powell, pretty much believing someone who said inflation was transitory. I'm not taking any of this to heart until I have evidence of a reversal. They've lost pretty much all trust with me when it comes down to them being in front of the ball. I have no reason to believe them. They've missed horribly every month up until now. And again, we have zero evidence in any of the markets here that we are going to get this amazing curve here within the next 30 days or so. And I'm not saying it's not possible. It could very well happen, but I know what happens when you try to, just baby everything and get this soft landing, like he said, and start speaking positively to the market and ignoring the fact that everybody can see things getting more expensive. Everybody's feeling inflation and stuff like that. And this is really just retracting the growth and say, oh, people are spending less. Yeah, absolutely. Things are more expensive. That goes hand in hand. But until we get some evidence here, I'm still averaging into my positions and stuff like that. But for the most part, I am still going to remain cash heavy until I get some evidence, until we get either a further breakdown or I get some evidence that we are in fact not correcting, but in fact improving, and we're headed the opposite direction. And then at that point, I will determine, okay, well, this is as close as I'm going to get to the bottom, and then I'll start making entries. And of course, I'll point that out to you guys. But as of right now, I'm not buying anything the White House is saying, what Jerome Powell is saying. This is, for the most part, the definition, and them tiptoeing around this, it seems like a bunch of BS to me, and I don't really like it at all. But that's just my 2 cents on that. But I really strongly suggest that don't believe everything you hear and just kind of like put some extra thought into it. Everybody has to do what's best for them. But as far as for me, that is my outlook on the markets going forward. And I look forward to the CPI numbers and stuff like that coming out next month and in September, because supposedly they're going to be improved dramatically, and they're expecting to drop down to 0.50. And before the end of the year, we're going to be down to about 0.25 basis point hikes, because they ran the numbers and inflation is pretty much conquered. So we'll see. That's going to be my favorite word today, is we'll see. So anyway, hope this video provided you with value. Subscribe to the channel, like the video if you want to hear more from me, and I will see you in the next one. Thanks. Have a good night.